Hello and welcome. Good morning, good afternoon. Welcome back to the breakfast show. Oh, wait a second. Let me do this. Well,
there we go. Much better.
Much better.
Thank you, Neil.
Good morning, good afternoon. Yeah, almost. How are we today? First of all, yes, we are the world champions. Exactly. We are. It was actually not that far from you. Actually, yesterday, in Jersey, they played the final.
It was in Jersey.
Yeah, MetLife Stadium. Apparently, it's in Jersey.
Yeah, that's pretty close.
So good morning to everyone here, or afternoon if we are in Europe. Then yes, afternoon.
Morning, Josh. Yeah, morning, Eddie. And many mornings here.
Yeah. So how are you today?
I'm pretty good, Neil. I mean, earnings seasons are starting back up, which is exciting both for a content creator and a semiconductor investor, especially since this week we're gonna have TSMC and ASML both report earnings, and they're kind of in the top of the chain, right, of the semiconductor space. So they're going to provide a lot of, at least, the trend where this market is going to go.
Yeah, and right now, for those that are interested, right now we look at the European markets. There are, FTSE is green, but it makes sense. But European markets are, of course, down because Trump has slapped them with a 30% tariff. In Asia, red / I would say mix here again. Pre-market in the United States, we are currently red as well. The 10-year did go back above the 4.4%, and the euro dollar sits at 1.16 at the moment.
Yeah, I was gonna say I saw one of your favorite stocks got an upgrade today, Neil. I don't know if you noticed that. Nebius, I saw it up about 6%, I think, on the day. Which is pretty exciting. I was hoping maybe some of these upgrades could wait about a week or so I can. This one I definitely want to start adding a position into, and now freaking Goldman Sachs comes in here and ruins that for me.
Yep. So I had all of this prepared. We actually, so Nebius got a new price target basically. Oscar got another downgrade, so we can talk a little. I'll touch a little bit on that in a second. But yeah, if you want, we can start off with Nebius because I think it's a name that you are getting more and more interested in. So Nebius right now is up, I think, yeah, 6 to 7% pre-market. Goldman Sachs initiated a position, I don't know, say this. They initiated a coverage, a buy rating with a price target of 68. Could have done $1 more. Could have done $1 more. Wouldn't have changed that much. So, what do they see here? The catalyst: one, AI neocloud market expanding rapidly alongside the Gen AI demand. Two, full stack software cost efficiency and scalable execution differentiate Nebius. And three, valuation remains inexpensive versus peers with bull bear skew favorable. The analyst sentiment is, of course, positive. They expect a supportive catalyst path over 12. What is this? Catalyst path over 12 million and sees Nebius well positioned for continued outperformance. I don't know what that 12. It's 12 months. Sorry, it's 12 months.
What a noob!
Yeah,
Oh my goodness.
Anubius. So yeah, again, I mean, that's 46, 45% upside from the price we're at today for Nebius. I was also hoping that the stock would drop even more. I did already buy a little bit more on Friday, but I would have loved to buy a lot more if it did drop to the 40s, but it seems like it is not. And to be honest, fine, then I guess I'll just buy more now and my average is going to be higher. But big deal. The end goal here is to make sure that I own more shares for the future. And yeah, I guess I'll have to pay up.
Yeah, yeah. I'm gonna see. I do have like a small options account that I use to kind of build position to use for like some positions. And I did sell a put on this. I think my price was around 45, but I don't think it's gonna after this price target. I don't know, but the market always gives us opportunity. If anything, that might be a great way for me to enter it via. So yeah, I mean, I definitely did a lot more research on it, and just with the $10 billion and all the things it has, I can see the multi-bagger potential in this one. Neo, you finally sold me
Hmm.
to it.
Well, welcome aboard. Well, almost, I guess. Yeah,
Well, not yet, not
almost
yet.
welcome aboard.
But I mean, the thing is, even with the 7% boom, right? If it is a multi-bagger
Then who
position,
cares?
I don't see that. Yeah, right, exactly. So maybe you might even change my mind to even just at least start with the entry position pretty
I
soon on
mean,
this
it's
one.
the invest and then investigate type of a move. Um, Talk about invest and then investigate. Oscar, Oscar can't catch a break right now because it's getting downgraded left, right, and center, which again is hilarious to me because all of the downgrades,
Where were these
now all of the
priced
downgrades,
after the price target
not
drop?
only that,
Uh,
but all of them came after the stock stopped going up and up and up on a daily basis. Like 2 weeks ago, the stock was, I think, at the same price, or 3 weeks ago, the stock was at the same price we're at right now. Like if I check the last month, stock was, yeah, approximately flat. Crickets. Now that the stock has pulled back, um, suddenly we have more and more of those price target. Well, in this case, we have a downgrade to neutral, and they cut the price target from $18 to $14. And here as well, same story as the analyst from last week: uncertainty, higher risk, etc., etc. Now with Oscar, to me, it's I have a position. It is in my invest and then investigate type of stage right now. But I watched and I covered this in yesterday's portfolio episode. I watched the whole interview or podcast with the CEO from a month ago, so the info there is quite fresh. The guy, the CEO, and I'll pull it up here. The CEO has spent, well, the majority of his career in the healthcare and insurance industry. I'll show you where he worked before. So this was basically him. He was 4 years at Cigna, and then he was 15, almost 16 years at Aetna. This guy came to Oscar not because, and he said it in the podcast, in the conversation, he said, look, we've had conversations, etc., but do you want me to come in just to flip the business? Because when he came in, Oscar wasn't doing very well stock wise. I think it were $2-3 or so. And he asked point blank, like, do you want me to come in to flip the business, sell it off, and that's about it? Or do you want me to come in and change the industry with this company? And of course,
Yeah, that's coming in with some
exactly. I mean,
confidence.
for someone that has this track record, I think he can say that. And so yeah, now he's CEO. So I guess yes, they're not here to just flip the company and then sell it to the highest bidder. They're here to play and change the game. And with these types of companies, I mean, especially in the US, the health insurance industry is a very, very complex, complicated. There's lots of politics that come into
Hmm.
play, yeah,
Lobby,
lobbying. And
lobbying.
so it is important to me to know that the captain of the ship here, the CEO, knows what he's doing, um, gets a lot of trust as well. He did say, again, he talked about, I think we spoke about it yesterday in a full show.
I'm like, I didn't see you yesterday,
Yes,
but I
you
did.
did. And we'll see each other later today as well, I think. Not I think, I'm sure. um, And then he talked about the basically getting a PE multiple, a higher multiple from the market. That's basically the market trusting. Um, yes, he was at Bridgewater from Ray Dalio, actually. Um,
Oh,
yeah,
he was. Wow.
if I remember correctly. Is it? Yeah. Wait.
That would be pretty impressive. I know that Bridgewater doesn't get much love, but I still
Yeah,
find
yeah.
it
No, he
pretty,
was co-CEO of Bridgewater Associates. Um,
hmm,
yeah.
pretty interesting.
So he basically said, look, to get a higher premium from exactly. And it's funny because he did I don't remember exactly if it was Aitna or with Signa, but one of the two, I think it was Aitna, when he basically, yes, when he took the stock from $10 to $200. And at one point, I think it was at $30 or so, he said one of our biggest shareholders came and told me that we have to increase the dividend and increase the buybacks. And he's like, actually, no, we are going to decrease the buybacks and not pay a higher dividend because we want to invest in the business. And they're like, yeah, but we are your largest shareholders, and we will leave if you don't do that. And he's like, okay, leave. And
That's
and
fine. Yeah, that's good. That's the type of leadership I think you would
exactly.
want, and especially, I mean, I don't know, Oscar, if it's um, is this? I wouldn't, I wouldn't say startup, but is it more of like in the
Yeah, it's a
beginning
$4 billion
phases of its
company.
life? Okay. Yes, I mean, you would want that, right? If you can have all that massive expansion, if you have kind of that total addressable market is much bigger than what you're at hitting right now, that would be the preferred thing of just
Yeah,
massively
no, but he did
investing.
that at the previous. Yeah,
Mhm. Yeah, yeah. So
yeah,
it's
yeah.
good to
For the
know that
smaller
that
one,
he has
yes.
kind of that
Yeah, for sure.
mhm, that
Mentality, mindset. Yeah.
mentality. Thank you,
Um,
thank you.
no, and then and then he's like, yeah. When the stock was at 100 plus, they came back and they said, "Oh, we made a mistake." And he's like, "Yes, you did." um, so pretty cool. I mean, pretty good thing to know, especially for me, who, I mean, I still believe that this industry is very, very complex, but it's reassuring that there is this type of CEO at the company right now.
Thanks for that, Neo. Um, let's see. We have some questions here. You were just talking about this from Tan Oscar downgraded by a 0.5 star analyst. LOL. Um, we got a few questions on Big Bear. So JCP, tell us about Big Bear. Good time to buy. Um, This is one that I don't follow, Neil. The way I look at it right now is it's definitely getting a nice amount of tailwinds from both Palantir and having AI in its name. Um, at the moment, I feel like there's plenty of other opportunities for me to spend my time in. Have you looked at Big Bear?
You know what time it
Any
is? You
thoughts
know
on
what
it,
time it is?
Neil?
It's time to look up the old fiscal.ai.
AI.
let's see. I mean,
Let's look at some financials, right? Some financials. We can look at some expectations from analysts. Maybe see some valuation metrics. Uh, let's take a closer look at maybe some balance sheets to see what we can determine, at least on the top
I
level
can tell you
overview
that
here.
this is not a fast growing company, that's for sure. Let's see. Boom. Ta-da. And of course, all of this is available on fiscal.ai, proud partner of both of our channels and this live stream. You'll get
Hmm.
15% off if you use our link. It's amazing platform. Both of us are using it, and we've been using it for.
Daily, I use it daily, Neil. It's insane. Obviously, they're partners, but even if I wasn't, I would be
Yeah,
using it
that's the
daily.
thing. I used it before they reached out, which is even better.
Yeah.
So, BigBear.ai. Stock wise, of course, year to date, I believe it's doing fine. Yeah, it's up 52%. Huge increase more recently.
Percent. Nice.
Over the past 12 months, up 300%. Um,
It first. My first question would be right. When I just even look at that chart, what happened in March that caused the overall, or between February, right, where everybody got excited, and then it dropped down from, um, I guess that was like $8 or something, back down to like $2, um, from 10 to 2, right? What happened, and how is that different from what's happening now? Right? Is it just that same momentum that happened during that time frame that is creating the same momentum here? And are we just gonna get another era like that?
yeah, just had to double check, and it seems like SoundHound did
In-
the exact same thing, just a bit before,
a bit
a bit
earlier.
earlier. So currently, it's a company worth around 1.8 billion dollars. Of course, we're not going
Hmm.
to focus on the PE right now because it doesn't make any sense since there is no E at the moment. Um,
Hmm.
so what do we have here? First of all, for a company like this who has been marketed not by maybe by them, but by a lot of creators as well as the next Palantir. The next Palantir
Hmm.
that has only grown 3% is not really a next Palantir and more like a next Coca-Cola or something like that. Um, they are
Yeah.
expected to grow a little bit faster, but still only 9.1% forward 2 years
Mhm.
compounded. Um,
Yeah.
and so
You know the. Oh, go ahead, Neil. Then after that, I'll share a quick thought that I saw.
no, and so I mean, when I look at the
Uh,
growth rates, when I look at currently the margins, of course, this is a small company, right? Revenue-wise, they're generating
mm-hmm.
100 and let's call it $60 million in revenue. So you're paying around 10 times sales right now. Sales that is not really expected to grow double digits or high double digits at least. I don't see the appeal here. I don't see the appeal. I
Yeah,
know
and the
that the
first thing.
CEO that has come in is coming from, I think he was in government position before, so maybe he has some
Mhm.
contacts, but
Yeah. Yeah, and I saw. I mean, valuation. I would say I'm surprised it wasn't as bad. Of looking at just the EV to sales, right? 11 is not that crazy. But then I don't know why. When I think of this company, I think more of like a little software solution for it to give me even the next 12 months of EV to sales of about 11. I was expecting those gross margins to be a lot better. I know hardware companies that do better gross margins than this, and that would probably be one of my first red flags just looking at these top line numbers. Now, like I mentioned, green flags is at least on the EV to sales ratio, not the craziest thing. I don't know why I would have expected a lot worse than that. Another red flag, what you mentioned, right, Neil, was kind of the growth in the compounded annual growth rate. A financial health, it seems pretty strong, at least cash and debt there.
yeah, I mean, I don't know. It's not that interesting to me at the moment. Let's have a look at their last earnings report. Quick AI summary here to not waste that much time. It's one of the best features here, especially now that we go into this earnings season. Quick AI summary, bam, you get everything you need to know. So, I mean, even
It's so
last quarter,
it's so weird. 5% year over year growth. I mean, I feel like massive giants are growing at way faster levels than that.
yeah, so only 5% growth, gross profit 6%, Gross margin 21.3%. I mean, it,
Mhm.
okay, backlog has increased 30% year over year, but still, is this supposed to be that
Hmm.
so-called next
Mhm.
Palantir, whatever? I don't. I just don't see it.
If you could, really quick, Neil, can you go to a custom summary real quick and just put what is management most excited about? Good thing about AI is it knows when we misspelled and it doesn't care. Um, I'm always shocked with how usually this management is most excited about convergence, national security. This excitement stems from several key factors: the renewed focus on defense technology. Um, yeah, and so I mean, about the company's growth strategy for 2025,
Which is what?
but they didn't give it seems like they haven't even given much of a number.
Uh,
So yeah, I mean, I think that's one of the main things is the overall excitement. Um, it's the overall excitement from that backlog of around 30% year over year growth. Um, but you have to make sure that that backlog is you're recognizing it as revenue pretty quickly.
yeah, so they're projecting between 160 and 180 million dollars in revenue
Hmm.
for the end of 2025, and I'm like, what? That's it?
Yeah, because that means, I mean, right here, 35 times 4 will give you what, almost 140. So it's like, um, that's not expecting much growth from it there. So I mean, I don't know, not a fan. I get the excitement. Sometimes we find a small company and we see that there's massive potential. But what I'd rather see is want to see that massive potential, but also some backings with it. Um, and to me, at least on the top level, nothing that I would get excited about. But that doesn't mean the market won't. The market can easily get excited for something like this, and can create a lot of positive returns in the short term amount of time. The worst thing you want to do is get burned and trying to buy at these levels, and then uh, buy at these levels. The stock goes down, and then one just becomes a long term shareholder because their trading plan didn't go as expected.
Yeah, I mean, like someone says here, Abdul says here, BigBear.ai is just hyped. I believe their CEO used to work in the Pentagon. Yeah, that's what I said. He used to work, I think, in the defense or government. It's a pump and dump. I don't know if it's a pump and dump. It's just an AI hype stock, I guess. Buy at $3, hold for months, sell at 7, then wait again, buy at $3. So yeah, if you like to trade these types of names, I guess it makes sense, for sure. I did see a comment from someone that said that Micron is
Hmm.
down. Um, and yeah, it's down pre-market 3.4%.
3.4%.
Yeah,
Let me see if I can find something.
I already did. I have
There. I just asked Neil to do it for me. Thanks, Neil.
Neil AI.
What you got, Neil? We got a downgrade.
We got. Did they get something? No. Let's see here. So apparently, HBM oversupply rumor emerging through calendar year 26 via overnight
Mm.
stocks. Okay, that's basically their account. Rumors suggest HBM could face potential oversupply issues extending through calendar year 2026, raising concerns about market balance and pricing pressure. I would be very surprised.
I would too, Neil. I think sometimes the market might be. I think we've talked about it, Neil, where HBM is not one product. HBM is a lot of different products. You have HBM3, you have HBM3E, you have HBM4, you have HBM4 custom. I do believe as we get further in the timeline, certain HBM products will become a commodity because you will start to have more entry into it. Now, the real way for you to survive in this HBM market is for you to keep innovating. And the demand for that innovation memory still be there. I still believe that demand for that HBM solution is still there, but maybe something like HBM2E or HBM3, those might start to see a bit of an oversupply issue. So I would find it pretty weird that they didn't talk about what type of HBM type. is the oversupply. I'm gonna guess is more of one of those younger generations which have more um players building it. Something like HBM2, there's a lot of players building that already. Even maybe just traditional HBM3. And then within each platform, right, you have HBM3, 8 stack, 8 stack, 12 high, 16 high, or whatever. So as long as you're innovating, Micron is definitely innovating. And I don't even own the stock to be trying to defend it right now. But I would say rumors like that are probably more of an overall term where you don't understand the difference, between the different types of memory solutions within the HBM space. And everybody just thinks HBM, AI. Look, this is that secret sauce that tells us the AI market is dead.
Yeah, and I mean, look at this comment right here. Edgewater sees mixed 2025 outlook for Micron, and I believe this is what SanDisk, right? Probably.
Mm-hmm.
Which again, it doesn't make any sense because Micron is sold out for the year, right? For HBM specifically, and so yeah, I don't know. I did also see this comment, but fine. Micron has moved from $60 to 130 since April. I'm not chasing that. A lot of these
It's
comments
so
just don't make
weird.
any sense
Yeah.
because at 60 it didn't make any
April.
sense. Yeah, I'm like, this is not a reason why you shouldn't be looking at these types
Yeah.
of companies. Like, it shouldn't be at 60. It shouldn't have been at 80 either. So
Yeah.
it's not about
Yeah,
chasing, it's
I
about looking
agree,
what the
Neil.
business is doing.
Mhm.
So
It's important to understand why some of these price actions happen, right? 60s got hit. We got to 60s because of the massive fear in the market. So it's I think it's always bad to just look at one timeline, one price point, one reaction, and decide that, hey, look, this is a chase. But everybody has their own investing method. Eventually, they'll find one that works for them.
yeah, the chase is better than the catch.
Mhm.
But in this case, the catch is better than the chase.
Yeah, and
Um,
we talked a little bit about this already,
yeah.
about the price target from Goldman Sachs. That was pretty bullish. Neil even did a nice happy dance for those that want to check out the show later.
I even have a new haircut just in celebration of it all.
Eddie, Micron stay winning. Haters are mad. And I think Micron will stay winning as long as they keep innovating. And I think to me, that's the biggest threat that is unseen for Micron is if you have any slip up, and it could happen with any company, right? You could have a slip up when you're creating new innovative technology, when you're trying to test out new manufacturing pushes. There could be a slip up somewhere. And um, I'm not saying it's gonna happen, but if that was the case, that would be my biggest bearish thesis for Micron right now. Is just the potential of it being a risky, of skipping a beat in the HBM space. But from what we're seeing right now, they're definitely progressing in the right direction. I think they mentioned it during their last earnings that they were already shipping maybe some HBM4
Yeah.
entries
Hmm.
to selected customers. So that's pretty amazing in my opinion.
Yeah, that's the thing with especially with these types of players for sure is do not, first of all, don't overbuild, right? So you don't get
Mhm.
stuck when there is a down cycle, but in the up cycle, stay focused, and I think that's what they've been doing. So again, if some boutique analyst shop wants to come out with some claims, go ahead. I'm still quite bullish on Micron. We also have here a price target, again, upgrade for a Rocket Lab from $33 to $50. Analyst comments here. This is from Citi. Analyst comments here. Key watch items for the quarter. We are watching for progress timing updates on Neutron, incremental DoD announcements opportunities, and the ability for company to capture additional launch opportunities. I agree. I mean, if there is like a big delay with Neutron, for example, if they say that suddenly Neutron is for 2026, I think the stock could get hit quite hard, quite hard. I don't know if that's going to happen, so I'm not here to spread any further or whatever. I am a very big fan of Rocket Lab. I am up, I think, over 500% still on that position, if not more.
Damn.
Yes, exactly. Tap on my shoulder. Um, but yeah, this is again a company where I see opportunities of it becoming like a huge a giant in the future. I did find another space company from Canada called MDA Space. I will cover it probably in a separate video. It's a company that has been around for a long time, and for some reason nobody talks about it. But it's a company that has been killing it. I mean, generating over $1 billion in revenue currently, and I think it's worth around $5 billion or so in market cap, or not even. So definitely under the radar, flying under the radar right now. But yeah, for Rocket Lab, just wanted to share this. Um, we do have also for the HIMS shareholder. Apparently, the HIMS app downloads have declined year over year for the first time. Morgan Stanley AlphaWise data shows a notable slowdown for HIMS and HERS in June. Monthly app downloads fell year over year for the first time, and web traffic, what they should have said, but the web traffic rose just 5%, the weakest growth since March 2024. Morgan Stanley flags a slowdown in business momentum at HIMS and HERS. June app downloads dropped 8% year over year and 17% quarter over quarter, to 185,000, below pre-GLP-1 launch levels. Web traffic was just 5% year over year, the weakest pace in over a year, while HERS now makes up 40% of downloads, up from 26% a year ago. Overall engagement trends are soft. Mobile continues to dominate, making up 80% of total traffic, and HIMS pre-market is basically flat at the moment.
Oh,
But just wanted to share this. And then the last one for now
nice.
is, of course, Needham maintains buy rating on Uber, raises price target to $109 from $100. They observed pricing moving slightly higher quarter over quarter for Uber and Lyft. This, coupled with healthy demand data points, gives us greater confidence in our 2Q estimates, but not enough to increase. Lyft pricing's advantage and Uber's wait time advantage are at recent highs. We're increasing our price target on Uber on a higher target multiple, but a discount to where it trades now. Near term, the multiple is likely dependent on the next AV headline, of course. Uber Lyft launching with May Mobility this year looks like a positive, adding another tech provider to the rideshare ecosystem. But Tesla expanding their robotaxi footprint and Waymo potentially launching alone in Miami. They're launching in Miami with a company that Uber does have two board seats on, and I think also a strategic investment. So important to note,
Mhm.
Needham. Um, in Miami and DC, Uber might be launching their Waymo launching there alone. Could weigh on the multiple, assuming the consumer remains healthy. Uber's ability to compound bookings over the near term is less of a debate in our view. So, pretty happy with that. Let's see if Uber stock is up pre-market. We are. Let's see. We are not. We are basically also not moving.
Yeah.
So we'll see. We'll see what
Yeah,
happens.
and the more I learn about this autonomous vehicle market, Neo, the more I don't get as worried as much when we see Waymo kind of release without Uber. There are a few things that I was researching that could impact this. For example, if Waymo is just starting with an initial fleet of just like a handful or so of Waymos, it makes no sense for Uber to have that, because then what you're going to have a selected different solution of autonomous vehicles for just 10 vehicles or 11 vehicles, and then just create kind of like a negative experience for your user. So you have to have it where it's both beneficial for Uber and Waymo. Sometimes Waymo is just testing things out as well. There's also other things like some regulations that need to happen before you can kind of put some things in like a taxi application. It's now becoming, if I don't see Uber being partnered with Waymo, it's becoming a little bit less scary than it was in the past.
Yeah, but I mean, I think we are still going to see quite a lot
Yeah.
of launches,
And
um, Waymo and Uber, and Uber with
yeah.
others as well.
And I know you posted them, Neil. I just wanted to talk a little bit of some of the Micron comments we got. So Sender here, MU is
Hmm.
expanding capacity in the US while Trump is in the office. Micron should be okay. I would say I don't think it matters too much because Micron was building in with the prior administration, and I think it's going to continue to build with the next administration, whenever that happens. It's more of just the innovative space. I think that's all that's going to be a massive reason for Micron to be okay. Then we saw Jackson. I love Micron. I live near the boys' facility. I have 50 shares. Matthew says Micron has definitely been kind of a really tough stock to own. Definitely, right? This is one that historically has been very dependent on the cyclicality of the consumer space. Now, the question is, and it seems as the answer is yes so far, is the HBM market reducing maybe some of that cyclicality? I think the answer is yes for now, because eventually, right now, I do believe the AI market would eventually have a cycle as well. I just think we're not there just yet. But Micron can definitely be pretty tricky due to the cyclicality and the competitive in maybe certain products. As long as it keeps innovating, I think at least HBM Advanced will be a moat. Regardless, I think everything else will still be competitive. But finally, I agree with Matthew. Rather own the goat here, Nvidia. So yeah, I mean, some great thoughts there for Micron. I definitely think Micron is going to be a tricky one to hold, and it's one that you really need to understand the business uh, to uh, to not have weak hands with it. On the bright side, with TSMC reporting earnings this week, if we do get some positive traction on maybe the consumer sentiment, I do believe that could drive some bullish sentiment for Micron as while their HBM space has done really well, the consumer market for them has been pretty weak. So now you have the tailwinds of HBM, and if TSMC says that the consumer market is picking back up, you're gonna have that tailwind from the consumer space as well. Yeah, I'm pretty excited for TSMC. Maybe I can show some slides in a bit, Neo, of what to expect from earnings.
Yeah. I don't want to touch on this comment from Sandy. Makes no sense to own 30 stocks like some people here. Might as well own an ETF with some stocks. First of all, everybody does what he feels more comfortable. It's their portfolio, whatever. Plus, if you own 30 stocks or even 20 stocks or 15 stocks, if the top 5 make up the majority of the portfolio and the rest you own because you want exposure to that and you think that that could be potential multi-baggers, or maybe it's just the start of you building out the position, then it makes sense, right? Then you can have 20 stocks, but if let's say the top 5 make up already 50% or so, or 60%, then that's a big difference. Okay, if you own 20 stocks and each stock is 5% of your portfolio, then okay, then I might say, yeah, okay, fine, then I don't really see any reason there. But if you have higher concentration in your higher conviction names, then it makes total sense, right? It's about owning good businesses. And if I can own a lot of good businesses, then why not? Why not?
Yeah. I,
Of course, we
Crazy, yeah, Neil.
go
I
ahead.
mean, I think it's everybody does their own thing. But I agree. Just saying the number of stocks you own doesn't really explain anything in your portfolio. I could say I own 100 stocks, but what if 99% of my portfolio is on Nvidia? I mean, it does it really, right? So it's always understanding of how the portfolio. I think portfolio diversification is more important, and I agree with the point you were making that if it's a equal weighted distribution with like 20 plus 30 plus, not a fan of that. But if you have
Yep.
like you mentioned 5 stocks that hold 70-60%, how different is that from someone that owns 7 stocks that own 100%? So it's like it's numbers is different, and it's more about the allocation prefer.
Yeah. I mean, it's always about
Yeah.
the allocation,
Yeah, I mean, Eddie,
of
he
course.
owns 30 plus stocks, but 15 of them are just tiny
Uh,
yellows.
Yeah. Um, and it makes sense, right? Because you want your YOLOs to be tiny. Because if it works out, great. If it doesn't, then it doesn't really impact the overall performance here. Talking about YOLOs, maybe we can touch a little bit on. Wait, first, let me touch on the Piper Sandler downgrade here of SoundHound to neutral from overweight with a price target of $12, which I think is still higher than today. Yeah, a bit higher than what it is today. While we initiated a few months ago, and our thesis points are generally still intact for this Main Street versus institutional name, retail basically, there are a few things that have changed for us. One, the second half of 25 setup embeds decent execution across the three pillars, but inputs leave near-term concerns that deals may be pushed into 2026. SoundHound is trying to achieve profitability while investing in Amelia's success. I believe that's the company that did acquire a year or so ago. It's hard to do both. Even if Amelia is successful, this carries higher earnouts plus dilution. Three, if this pressures second half estimates, it would weigh on the multiple over 20 times calendar year 2026. As shares are up 30% over the last few months, we remain constructive on the long-term opportunities, and second half execution could create a squeeze on shares, but fundamentally we see a balanced risk reward here. I mean, again, overweight, price target $12, stock is just over $11 right now, so how big of a
I'm
balanced
surprised they
risk
gave that a
reward?
price target of 12.
Yeah, but Uh, I guess they'll change their mind once the stock moves.
Once, yeah, once we saw it coming, blah blah blah. Here's the new price target.
Yeah.
Um,
Um, so yeah, Nebius
yeah, you
Core
had the question.
Reef.
Mhm.
Yeah, Nebius Core Reef applied to digital and digital ocean. Um, I mean, Nebius and Core Reef similar, but again, Nebius does offer you also other
Yeah,
options. Also focused a lot more on that full solution software and hardware side of it. CoreWeave really trying to be that next hyperscaler, super close
so,
relationship with
but
Nvidia.
Neil, maybe we can just start off just on a very top level overview. Applied Digital, right? They pretty much built their business model is built kind of the outer shells of a data center. So Applied Digital builds kind of like your massive building that you're going to put all your AI servers. They make sure you have like your cooling, all your utilities connected to that building. They make sure you have plenty of power. They have make sure you have plenty of utilities. So they built kind of like that outer shell of the data center. Um, then their typical customers could be kind of like your CoreWeave of Nebius, who want to build the internal system of the AI of this kind of AI infrastructure. They're the ones that are putting the AI servers together and creating solutions out of that, either just renting out the AI infrastructure as bare metal, or like Neil mentioned, you kind of can have like the software solutions added on top to them to have increased margins. But Nebius and CoreWeave typically would be considered a company, a customer of a company like Applied Digital, where they don't want to build the data center themselves. They rather have someone else do it for them, and they just come in with the chips and those internals. I'm not too familiar with the other one, Digital Ocean, but then outside of that, Neil, you have Nebius, which CoreWeave is really just focusing on AI infrastructure. That's it. Where you showcased above, Nebius is hitting a lot more than that. So within each business, they might have different segments. Um, and if I may be honest with Nebius, seeing this really shocked me. Because you've always mentioned it, but I don't think you ever showed me that slide. If you could just say, Jose, just look at this slide for 1 minute. This is all you need to be bullish on Nebius as a $10 billion company.
I mean, you should have watched my video when it was a $4 billion company, and you would have known. You would have known, but
It's okay. At that moment, Neil, I was focusing on CoreWeave, right? So it's
correct.
better. It's good. It was good. Now I get to watch that video and sit on my CoreWeave gains and hopefully see them here with Nebius.
Yeah, because I mean, we always talk about Nvidia, and I think now I remember Sandy is the one that keeps on hating in my comments on their videos that I never talk about Nvidia and blah blah blah. But I think I talk about Nvidia daily during the live streams. So yeah, no surprise, no surprise. But here, yeah, we see also a partnership with Meta for for Nebius. As for the other ones, by the way, all of this you can see all the slides, all the reports also on fiscal.ai. What was the other one? Digital Ocean. I think it's the yeah. This
Yeah, that's one I've never really followed.
one operates a cloud computing platform. Its platform provides on-demand infrastructure and platform tools for developers, startups, and small and medium-sized businesses. Let's see. I think I did cover this company not a while, maybe a while ago, not so long ago. Let's see here. It seems like this is a decent growing company. Core cloud computing platform enhancement. So I think it's less about building and having those GPU clusters and AI data centers, and um, more about providing software solutions. Um,
I've definitely seen people be bullish of this in the data center era, or the data center transformation era, and I can, if they were bullish on it during the data center um, and digital computation era, I can see how maybe they could be trying to provide some solutions for the AI space. Um,
in the simplest scalable cloud for digital native enterprises.
So I guess the potential here, it does seem like they're focusing. I mean, just from that first line in the enterprise space, and the enterprise space usually is a little bit of lagging in certain technologies. So if and I saw revenue wasn't that big. So if AI starts to really pick up into the enterprise market, maybe this could be a massive growth player. I wonder what are the estimates in revenue expectations for this company, Neil. If maybe in a bit we can look at that
Yeah,
after these stuff here.
I just wanted to see. Okay, so we have seen a nice little recovery in retention rate, so that's good. It was under 100. We're now at $100. So um, pretty. I mean, it's better to be at 100 than being under it. Would be great if they can go back to 105, 110 or so, 10 or so. But okay, pretty good. Revenue estimates for the upcoming year. Let's see. Whoops. So it seems like we are, or the market expects it to accelerate a little bit. It's not
Yeah.
high double-digit growth.
Hmm.
It's 13%, 14, and then 15.5. But again, a good trend, I'd say.
Yep.
Um,
And sometimes what I would wonder, Neil, is this kind of a story with Oracle? As we know, with Oracle, they had like a lot of legacy products that they were kind of seeing a
mhm.
decrease in, but then you had that acceleration from AI and from their infrastructure. That was, even though they were growing that market dramatically fast, the legacy products were making actual revenue growth rates see a lot smaller. So one thing, that's what I would. I'm curious now to see. If they have something like that where maybe a core product could be hiding the true growth potential for this one, if they're really focusing here in the AI and machine learning era.
Yeah, and it does seem like you're paying right now a bit over 10 times earnings for fiscal 27. So not that bad, not that crazy actually for a company that is growing EPS. I mean, okay, for this year it's doubling basically, and then 5.3%, but then in fiscal 27 EPS expected to grow by 23.4%. So not that crazy, not that
Yeah, and
bad.
Arrows, Eros, I'm pretty sure I butchered everyone's names. My apologies. Mentions that this is a stock from the past. I remember this was actually very
Yep.
popular in the 2020s, during I think the econ, where everybody was doing everything online. And I think one of their biggest opportunities that was, if I remember correctly, people were saying that a lot of small to mid-sized companies were using this, opposed to maybe like your cloud server providers. So it was focused in that era. Um, Sneaky has says he's been following DigitalOcean for 3 years. Sneaky, you've been following Question. Have you been owning for 3 years? Or
Hmm.
what are your thoughts on it right now for someone who's been following it for this while? Is this worth looking at, or would you say, Sneaky, we should try somewhere else?
I mean, it's still down 77% from their highs back here
Hmm.
in the bubble, in the 2021 bubble. But revenue, look, CAGR, compound 3 years, 20%. So the business has definitely been doing fine. Um,
Hmm.
so yeah, interesting. I do really quickly want to touch on Nathan's question because I think he did ask it a couple of times. Novo Nordisk, if it's still at 70, no, not this one. Okay, these are the shares in Danish kronen. Incredible. But yeah, you can buy it in Danish kroner. You can buy it in USD. Yeah, 69. Still, my views do not change. Of course, we are still waiting for a CEO announcement. But yeah, I still think it is a very good business to own that is still expected to grow quite quickly in the upcoming years. Although fiscal 27 sees only 2.5% year-over-year growth, but still very profitable, and I do think that they can continue. They
Yeah.
can continue to grow. If you were to buy core positions of your portfolio, what would you buy besides Google?
Let me guess. Nebius, PayPal,
Actually,
and Google. No.
regarding PayPal, so PayPal fell like a lot of fintech companies did because of that JP Morgan note on the fees, 5.7%. And let me see,
What fees, Neil?
so JP Morgan said that they're going to start to charge data aggregation fees to fintech players
Oh
pretty
wow.
soon, and so a lot of fintech players did fall. But Brad here, great follow on X, he was able to speak with a PayPal team regarding the JP Morgan fees. They called the news massively overblown, with PayPal having limited exposure to data
Hmm.
aggregators and the new cost. They're not reliant on open banking and are large enough to navigate this in multiple ways. So yeah, good, good to know. And so yes, it's time to maybe buy more buy more PayPal. But yeah, I just wanted to touch on that and to answer the question. I guess besides Google, I guess now I have to I think maybe still PayPal, Nebius. Um, can I get enough Amazon? Probably not. And if the other guy Sandy is still watching, maybe I'll say Nvidia just for the sake of it, right? I have to say Nvidia. Um, but yeah,
So do we have any market opens in about 5 minutes now? I'm just taking a quick look. One that has taken quite a hit in the past few days after a run up was Wolfspeed. It seems like maybe the market got a bit excited on.
yeah,
I know it saw stock price up after the big beautiful bill was kind of passed, and there was like a lot more excitement for the CHIPS Act there. So I wonder if many were expecting that Wolfspeed could have maybe gotten benefits from that. But it's back to, I saw $1.33. Uh, then
still up 3x, I think, from the
yeah,
lows.
from those 40s, it made it to around the 40s, right? I think. Um, Then outside of that, let's see. We saw Micron was down about 3%. Air Technology was down about 3%. I haven't seen that one's such a small company that sometimes I believe it could just move from nonsense. I'm seeing pre-market SoundHound is down about 3%, and Nebius up 10% right now already after the upgrade. Autodesk,
10%?
yeah, I see up 10% right now
This
on
thing is a meme
Nebius.
stock.
You would think so. Um, we have Autodesk up about 6%. Autodesk, I saw there were reports that they were going to make an acquisition. Um, I wonder, after the rumors happened, it seemed there was a lot of negative sentiment towards the acquisition. I wonder if maybe there's some reports happening um, about anti-acquisition. Meme stock CoreWeave, I have to say that to make you happy, Neil. It's up 3% on the day after just following maybe the tail of
You,
Nebius upgrade
you
right now.
think you think it will rebound? Like it will find some support around 130 after falling? Let's see. After falling, what is it? 30? Yeah, on 30% or so.
I don't know. And first, Susan, yeah, Wolf is going into bankruptcy. Very true. I think some of the Wolf investors were expecting that with the big beautiful bill, maybe it could be saved a little bit with potential new money coming in. But now with CoreWeave, I don't know, Neil. I want to say I don't like it at these price points. Sometimes I'm worried though, Neil, that is it me being cost bias blind? Am I just looking at it? Hey, I was able to enter it at such a low level. Why would I be buying at these levels? So that would be the first thing I will say. First, I gotta see who Victor Creed is.
You
But
don't
that
know
would
who
be the
Victor
first
Creed
thing.
is?
Maybe I don't know by name. But that would be the first. That's I don't know if that's just holding me back from CoreWave right now. If I still think 125 is a bit expensive, but when I was looking at I did a video recently, Neil, looking at Nebius and CoreWave. If
I
you were
thought
to look at
chorus.
both, huh?
I thought you were going to say maybe chorus is the way to go.
Uh, you know what? I think now they're kind of valued at around that price. Let me do that math real quick. But we saw CoreWeave drop down to 120, and Core's barely moved. I think if we do $12 and 0.5 divided by 1.235, I think was the number. You get you still get about $100. So yeah, I think Core's is definitely the way to go about it if you want to get CoreWeave and you believe the acquisition is going to happen. But yeah, I
Seems
think
to
I'm
be
a
at
little
a
bit more
nice.
excited of your stock at the moment, Neil,
Very
than
good.
CoreWeave.
Very good. Unfortunately, it is pumping, so we should
Oh
maybe
my
stop
god, I'm
talking
not a
about it.
X-Men fan. Then I didn't know Wolverine had a brother.
It's like a brother in arms. I
Oh,
think
okay.
when they were in the army in that special group with a striker, I believe, played by Liev Schreiber, Ray Donovan. I don't know if you know that show, um, but yeah, that's a Victor Creed.
Oh, he's Sabretooth.
Mm-hmm.
No. Yeah, right?
Yeah.
I had to Google it. See, Googling that.
I
Why can't people
love
just call it?
X-Men. Um, we have a minute to the market opens. Let's actually look at AMD real quick. Actually, we'll look at all of them when the market
And
opens and it is
quick
open.
thing, opening. Yeah, I agree, Eddie. I think bullish. I think he makes it sound like Air is a multi-bagger. I agree. I think Air has huge potential. But being a small company, you also come with that risk. So I'm happy with this one, Eddie, and any form of pull downs. I don't mind buying more and more.
Let's see. Someone did ask me about new holdings. Still think it's an amazing company. I don't own it right now, but still a very, very good company. Yes, it had
Nebius
that
up
pullback.
13%.
I told
Back in the
you
50s.
to stop talking about it. If we continue to talk about it, it will go up and up and up until we can't even touch it anymore. It's back to $50 now. Ooh,
Gosh
Iron.
darn it.
Another one of my meme plays here is up 5%. Hood is back above 100.
It seems most of the semiconductor space is pretty red today. I wonder if most of the market might just be waiting, at least in the semiconductor space, if we're waiting for TSMC's earnings to see kind of a full sentiment.
Yeah, Oscar is down a little bit, but not much. You would think it would be down more after that. Let me pull this one. So yeah, AMD holding up here, quite good. Google is at 183 buckles right now. Very
We also had to
nice.
stop talking about that one.
No, that one we can continue. We deserve some recognition. we deserve some recognition. I've had like someone write in my comments. I've learned more about Google from your videos than from Google themselves.
Yeah.
I'm like, yeah, I mean, they better pay me for it, but
I mean, they're doing so well, integrating their solutions. It almost. I don't have a smartwatch, but it almost made me want to buy one because now they've added Gemini into the smartwatch platform.
yeah, the
Um,
Wear OS ones, yeah.
yeah, but maybe I've heard rumors that the next smartwatch is coming out this summer, so I might just wait it out.
But the Pixel Watch 3?
Yeah, so I think the 4 might come out.
4? What do you mean 4?
Yeah, Pixel Watch 4. Yeah.
Ah, yeah, I have the Pixel Watch 3. What an idiot.
And I would love to hear more about their glasses.
Yeah, that's going to be
Hopefully they
interesting.
share. Yeah.
That's going to be interesting. I wonder if they'll come out with a tablet again soon, because the Pixel tablet is a bit outdated. I've read some reports on the Pixel 10. That's going to be quite powerful because I think they're using TSM now and not Samsung for their tensor chips.
I'll give my
Oscar is
9 to
green.
my wife then, and I'll buy the 10.
Yeah, I'm still at the 8. I'm still at 8. But yeah, for due diligence purposes, we will upgrade to 10. Let's see. SoFi is down a little bit, but I mean, we've been going up and up and up like there is no tomorrow. Meta is green despite that report that they might be fined $8 billion or so on the Cambridge Analytica thing. That's still ongoing, apparently. NVIDIA, see, NVIDIA, I'm talking about NVIDIA, Sandy. NVIDIA. We are down 0.5%. Let's see. HIMS is flat. Who's making big moves today? Micron down 5.7 right now. 5.7% on a Micron. Let's see. Where's the Applied Digital? Okay. We're up 4%
We're back
today.
on it.
We're still down, but we're back. We're still down.
Are we?
Yeah, I think we bought at 9.7.
Let me check. I have to look.
But it did rebound on that 50-day moving average quite perfectly right now. So that's good. That's good to know. The trade desk making moves. Yep. Trade desk is making moves after it did come down after that huge pump here. That was the earnings report, basically showing that the trade desk is still an amazing company. Then went back down. Now we're making our way back up. That's great. Let's see. Oscar being green is a pretty good sign. Let's see United Health, what they're doing. Down 1%. Maybe another Bitcoin miner. Cypher up 5.4. It makes sense, I guess, when with Bitcoin being up so much. So yeah, pretty good at the moment. So that will be it for us right now. We will be back tomorrow. Wednesday Wednesday's ASML, so probably we can cover ASML's earnings live on Wednesday, and then we'll do the same for TSM on Thursday, since both of them do report before the market
both
opens.
are pre-market. Oh yes,
Yeah.
nice.
Plus ASML being a European one, I guess everything will be live even before we go live, I think. And the same with TSM, no? Because
TSM. I was gonna say I think TSM is the same. I think they do it actually like 1 o'clock in the morning my time.
Yeah. So even better. So that's Wednesday and Thursday, and tomorrow we'll do probably a little preview as well, if nothing else changes. And thank you all for joining us on YouTube and on X. We'll see each other tomorrow morning. Bye-bye.